Hello, welcome to AleaSoft webinar. My name is Alejandro Delgado, Associate Partner of AleaSoft, and thank you for joining us today to the webinar with the topic Prospect for the Energy Markets in Europe, Vision of the Future of the Energy Storage. As usual, our first speaker today will be Oriol Salto, Associate Partner of AleaSoft, that will analyze the evolution and prospects of the European energy markets. Then, we are sharing this webinar again with Tomás García, Senior Director, Energy and Infrastructure Advisory at JLL, that will talk about contracted revenues for BESS projects through the capacity market and optimizer agreements. If you have any questions at any time during the webinar, please use the Q&A menu and we will answer them after the presentations. And now, I hope you enjoy the webinar. Oriol, you can start now.
Good morning. Thank you. Thank you, Alejandro. So happy to be here again with Tomás one year more, talking about batteries. But before we're going to make the usual review on the energy markets, a lot of it, and they are breaking several barriers. Okay, let's start with the beginning. I'll start with a brief introduction on AleaSoft and the services that we provide in case you don't know us. In AleaSoft, we provide energy forecasting services. We cover all the energy markets in Europe, also some energy markets in the Middle East, in South America, North America. And we have data and we are ready to analyze and modelize basically any market at the global level. Sorry, the forecasting methodology that we use is a forecasting methodology that we developed ourselves in AleaSoft. The three main points that we always like to stress about this methodology is that it is a completely scientifically based methodology. It's a hybrid model combining several techniques from the classical statistics like regression, econometrics, market simulation, etc., combined with more advanced techniques of artificial intelligence, machine learning algorithms, recurrent neural networks, etc. This hybridization, we can take advantage of the strength of each of the methodology, and our aim is to get a consistent, coherent forecast. The coherency from delivery to delivery is one of the aspects that our clients appreciate the most. And this is the methodology that we have been using for 26 years now. We started in the Iberian electricity market and now covering all the energy markets in Europe and some more around the globe. So we provide a lot of services, a wide range of services. We divided those services within 6 divisions, so they are more easy to explain because we started kind of organically adding new services as the needs of our clients started growing. So at some point we had too many services just to explain them at once, so we divided them in order to be a little more clear. Under Alea Green, we have all the services for the long-term forecasting. We're talking about 30 years ahead. Under Alea Blue, meter forecasting, so this is from hours ahead up to 2-3 years ahead. Under Alea Storage, all the services that we are providing now for batteries and for energy storage. We'll talk a little bit at the end about these services. Under Alea Hub, we have a couple of marketplaces for PPAs, for renewable energy projects. Under Alea White, we provide all kinds of information for the energy sector. We have recurrent reviews of energy markets each week in our website. Also, we make these monthly webinars. And under Alea Consulting, all the needed information for decision making in the energy sector. With all these services, we cover the needs of a wide range of energy players in the energy sectors. So from producers to consumers, investors, operators, etc. We also will talk a little bit more about the wide range of our clients at the end of my part of the webinar. So let's start as always with the oil prices. Oil prices have had experienced an increased volatility since what we were used in the second half of last year of 2024. So basically, due to geopolitical uncertainties, also there's a new president in the United States. You probably already have heard about that, and that introduces a lot of uncertainty on the tariff, on trade systems, trade policies. So basically, all this is introducing uncertainty, and we have seen increased volatility during the last weeks. Right now, prices are around $75 per barrel, and looking at all the drivers, mainly everything points in the direction of having upside risks. So if anything, prices will go up because we are seeing a very strong floor, a very strong support around the $72 per barrel. Sorry. So basically, everything points that if prices have to go in one direction, they're going to be up or stay around this $75-$80 per barrel. Right now, they are trading 74.5. So yeah, slightly lower because yesterday they increased a lot and they closed above 75. Right now, they are trading just below 75. Gas prices, those are the main characters, the main players this year. So during most of 2024, we have seen consistent upward strength, and during last weeks, we've seen kind of an accelerated trend in the increasing rate of raising prices. Basically, the main concern right now are the reserve, the level of the gas reserves. It's being quite cold winter, at least in the central and southern part of the continent. And basically, we are using the reserve because we have the gas there to be used. So we are using it. Also, the industry is seeing a slight recovery coming from the crisis for 2022 and 2023. So gas demand from the industry is also increasing. From the gas demand from power sector has also increased because we have had episodes of very low wind during this winter. We have seen some of them in our previous webinars. So basically, gas demand has been increasing, reserves are going down faster than previous years, and market is concerned on how much gas we are going to need during the summer, during the refilling season, and that is putting pressure on prices because we will need to refill the storage using basically LNG or a lot of LNG because we no longer have gas from Russia. So, and at the LNG level, there's a global level competition. So you have to compete with Asia. That also has increasing demand of gas. And basically it's another level because you have to compete with basically the whole world to get LNG to your storage. So basically prices right now don't see any reason to start decreasing again, at least. So we are expecting to have the remaining of the winter with high prices and probably during this. So also in the electricity markets, this year, 2025, is expected to be a year with quite high prices. So probably not at the level that we have seen in 2022, but prices are going to be for sure above the prices that we saw in 2024. We were talking about gas storage level. Right now, they are already below 50%. That's kind of also a psychological value. So right now, below 50%. This time last year, we were at 67%. That's nearly 20 points lower. So now the main concern is where we will end up at the end of the winter, how much gas we are going to need during the summer, and this is the main concern. This is the main driver that is now putting upwards pressure on gas prices. CO2 prices. Also, slightly also as a consequence of high gas prices, are also seeing an accelerated upwards trend since mid-December. And basically, as gas prices are higher, then it's at some point it's cheaper to produce electricity with coal, and with coal you emit more CO2, then you need more allowances, then CO2 allowances demand increases, and then that puts upwards pressure on prices, and this is basically what we are seeing. We are back at the prices from 2022, I guess. Here we can see a historical perspective, and right now we are at the level of 2023, at the level of 2023. We are not at historical heights, but we are going in that direction. As I always explain, the long-term prices for CO2 allowances are expected to be higher because it's an instrument, a tool to incentivize the switch to cleaner fuels, less emitting technologies. So the demand is scheduled to decrease each year. So the supply is scheduled to decrease each year. So less supply, it will make prices higher, and then that will be an incentive to switch to more clean fuels. So right now, if we can try to get more or less an homogeneous historical upward trend, we are more or less going back to the levels that we should expect in this long-term trend. So this long-term trend expects prices around 120 euros per ton around 2030. That's more or less what people expect, and we are now more or less going back to that expected trend. Now, let's see what we have seen in electricity markets these last weeks. As always, I will take this opportunity to show our online database. This is one of the services that we provide to our clients. So we have an online database with all the data related with the energy markets, everything that is needed to understand and to know what is happening in the energy sector in Europe. And we also have other countries. So you have electricity markets, gas prices, macroeconomic data, futures, and we are adding new data every year. So if they say that information is power, and in the power sector, it is even more important. So what we are seeing here are the average monthly prices for some of the main electricity markets in Europe. The last full month that we have data is January. And in January, we basically saw a general upward trend, basically following the upward trend that we have seen in gas prices. So on average, electricity market prices increased in January by 5.5%, but there are two extreme cases. UK on the upward side increased by nearly 30%, 28% exactly. And Spain, it's the only market that went down. Spain and Portugal went down by 13%. If we focus now on the last weeks, on last month, those are the daily averages for these very same markets. And basically, this is one of the last Dunkelflotte events that we saw. We already saw a couple of them in our last webinar. So it's basically a day or a period where you have a lot of demand due to basically now winter, due to cold temperatures. You have low wind, you have low solar, and then you have this spike in prices. But in general, you can see that since January, prices have this slightly upward trend following the trend that we have seen in gas prices. As always, Italy, the market with higher prices, and now the market with lowest prices is Spain, because we had an episode of a lot of wind during this during these last weeks. So now we replaced France with the price with the market with a lower price. So if we look at the hourly prices during this since the beginning of January, basically you see quite stable prices around and above 100 euros megawatt hour. So quite high level of prices with this slightly upward trend following the increase in gas prices. And then you saw this episode, the one that I was mentioning, with an episode of high wind that reduced prices in most of the electricity markets, with the clear exception of Italy. Italy is this green prices that you can see basically didn't even move. We can think maybe it's because in Italy there wasn't much wind like in France, Germany, or Spain. But we can take a look at that. If we go here, we can see for the Spanish electricity market, prices in blue and wind production in red since the 1st of January, January the 1st. And we can basically see how during high wind days, we have very low prices. We had, I would say, two main episodes of high winds, and in both we had quite or very low prices. So we were with prices around 150 euro megawatt hour. And during high wind days, we were clearly below 50. So a huge impact of wind energy on electricity markets. If we look at France, those are daily averages. So since the January the 1st, and we basically see the same correlation. So high prices correlate with low wind. And when you have high wind, you have low prices. And if we look to Italy, we basically see that price is basically not sensitive to the wind production. This is basically because the Italian electricity system runs basically on gas. They do have renewables. They have quite a lot of renewables, but compared to the amount of gas that they are putting in the energy market and the electricity system, it's quite low. So they do not have the impact that we see in our in other markets. So this is why usually Italy is one of the most expensive electricity markets, because they basically run on gas. So they are very sensitive to changes in gas prices. If gas prices are high, the electricity market price is also high. Okay, now I'll go back to my slides and keep going. Now moving to the futures market. So what are the market agents seeing right now about the energy that is going to be delivered into the future? So what are the prices now for the energy that it's going to be delivered into the future? So for Brent oil, this is the forward curve for Brent oil compared to the curve that we saw in our last webinar 4 weeks ago. Basically no changes. So we have seen a lot of volatility in the oil prices, but basically comparing the prices now with the ones that we saw in our last webinar, they are more or less at the same level. So basically no changes, just at the very short term, 1.2% lower prices for what is remaining of 2025. But what is really interesting is what we are seeing in gas. So as gas prices, spot gas prices have been increasing, as we have seen, futures are increasing even more, I would say, because, as I said, one of the main drivers of this upward pressure on prices is the situation that we are expecting at the end of the winter, so during the summer. So futures prices for summer are increasing even higher than spot prices or that near-term prices. So in just 4 weeks, 25% increase on the futures for the summer, for this summer, 17% for next winter, 12% next summer, 10% next winter, and also increases in the rest of the year, but just below 10%. So, and this is, well, obviously prices are running up. This is having an impact also, as we will see, on the futures for the electricity markets. And basically here we are seeing this forward curve is reflecting what we have seen, concerns about how much gas are we going to need during the summer and how we will get it and how much higher we will have to pay it to be able to get all that LNG cargos that we need to refill our reserve. And here again we are seeing a situation that it's not usual, that it's not typical, is that we are seeing higher prices for the futures for the summer than futures for the winter. So usually the usual shape of the futures curve, it's higher prices during winters, lower prices during summers. During winter, you have more gas needs, more gas demand, basically due to heating. And the usual structure is for the futures curve is high prices during the winters, low prices during the summers. But here we have exactly the opposite behavior: high prices during the winter and lower for the next, during the summer and lower for the next winter. And if we look at the evolution of this spread, the spread between summer and next winter, we see how after a given point around November, December last year, this spread switched the sign. So now we have had 3 months with prices for the next summer being higher than prices for next winter. And we reached quite high, €7 megawatt hour of difference at some point. Right now, around 3-4 euros higher prices for summer than for winter. And as you can see, this is quite an unusual situation. Forward curve for the CO2, as the spot prices have been increasing, as we have seen, the forward curve also increased on average around 6% in the whole horizon. Impact on the forward curve, futures curve for the power markets, basically as the future prices for gas increasing, electricity futures also increasing around 10%. Germany, Italy, and France. The only exception is Spain. That's because as spot prices decreased during January, we are seeing a slightly decrease in the futures for next year, just slightly more than 2% lower. So just to finish, a brief summary of the key elements that we are seeing right now, what we are taking into account in order to make forecast. Also a summary of what we have seen. All prices with a lot of volatility, they have surpassed the level of $80. Right now they are below. We are basically at the expectation of what is happening in the geopolitical side. Basically, if anything, everything points that prices should stay more or less at this level with volatility, and if something unexpected happens, prices should go up. Gas prices kept increasing. Basically, in the short, in the midterm, prices will keep increasing or staying at high levels. CO2 prices also increasing, basically because now we are switching to technologies that require more allowances. Electricity markets, as I said, we are expecting 2025 to be quite a year with quite high prices. So clearly above prices from 2024, probably slightly below prices from 2023, but more or less at that level. So not the prices that we saw in 2022, but quite high prices. And as always, this is starting this year and probably for at least the next 5 years, batteries, energy storage are going to be the main characters, the main players in the electricity sector in Spain and in Europe. We are going to see, we are seeing developments. Tomás is going to talk a lot about this. We are expecting our first capacity auction in Spain. So very interesting. So everything is more or less in line expecting this to be the year where energy storage and batteries in particular start playing an important role in the electricity systems in Europe. And at the long term, we'll have basically a system based on renewable energy, on hydrogen production, and obviously the important role that batteries and energy storage are going to play. And just mentioning the kind of projects that we are seeing right now for batteries and for energy storage and for hybridization. Basically, we are seeing 4 types of projects that we are doing right now. So what we have been asked for, standalone projects where you directly connect your battery to the distribution network or the transmission network, basically playing a price arbitrage or participating in the ancillary services. But very important hybridization with renewable energies, being it solar, wind, and also we thought it would be kind of an extraordinary case where you hybridize solar, wind, and energy storage. But we have been doing quite several projects for this type, so it's not something rare to see hybridization of the 3 technologies. So we provide revenue forecasting for this kind of projects, even providing some level of financial models, taking into account the capex, opex, depreciation, everything that is needed for the lifetime of your energy storage system. And as I said, we covered the needs of a very wide range of players in the energy sector. So we started dividing our services under different divisions in order to be easier to explain. Now we have also started dividing, segmenting our clients, our types of clients, in order to be easier for us to identify the needs of each and how any of our divisions can provide services to any of these segments or groups of clients, of potential clients, of players in the energy sector. And if you are attending this meeting, probably you or your company fall in one of these groups. And basically, that's it. As always, let me invite you to our next webinar. It's going to be exactly in 28 days, March 13th. And once again, we are going to have as invited speakers EY. We are going to talk about regulation, financing, this annual meeting, because it's going to be the 5th year, I think, in a row that they participate in our meeting. It's the meeting that we always use to just update everything we need to know about financing, about the PPAs. So a wide review of the regulation and financing, always very, very interesting. So that's it. Thank you, Alejandro.
Thank you very much, Uriel. Great presentation, as most of your presentations are. And Tomás, when you're ready, please, you can share your slides.
Yes, good morning, everyone. Let me share my presentation. Hopefully you can see that.
Yes, we can see it, and it's full screen now. Thank you.
Yeah, cool. So yeah, good morning, everyone. Yeah, thank you very much for being there. I saw the names, some familiar names in the participant list, so good to have you. And yeah, thanks so much to AleaSoft for giving us the opportunity to share some market insights on contracted revenues for battery projects in Spain. And also congratulations to you guys at AleaSoft, because I understand this is the 52nd webinar that you have organized. So it is quite an achievement. So congratulations for that. Now, my name is Tomás Garcia. I am part of the Energy and Infrastructure Advisory Group at JLL. I'll tell you a little bit of what we do and who we are. I'm going to skip the disclaimer quickly. And then in terms of the agenda, I'll tell you a little bit about us. I'll talk about revenue management and contracted revenues. And in particular, I'll discuss the Spanish capacity market, currently under regulatory approvals. And we'll talk about optimizer agreements, which is a source of contracted revenue. A little bit about us. So JLL is a large professional services firm. We are more than 100,000 employees in 80 countries. And within that big platform, there is a team who specializes in financial advisory services for renewable energy and storage assets. So this team is about 40 people across a number of offices in Europe. I lead the practice in Spain and Portugal, based in Madrid, but we also have colleagues in the UK, in Italy, in Poland, and we're setting up teams in France and Germany. Most of the work that we do is transactional advisory. So we support our clients in disposing or acquiring assets, in raising capital, in raising equity or debt. But we also do valuations, consulting, and support with contracting. In the battery space, especially in Europe, we are clearly the #1 financial advisor. We have closed 52 battery transactions in 13 different countries in Europe since 2016. So that's a market that we believe know quite well. So yeah, that's part of our expertise. In terms of revenue management and contracted services, I wanted to start this presentation by sharing with you the following concept about revenue management. So this chart tries to represent some of the different revenue sources that any renewable energy plant can tap into. It doesn't really matter whether it's solar or wind or batteries or a combination of those. As Oriol was saying, there is hybrid plants and there is more of those lately. As you can see, there is various different types of revenues. Of course, the primary revenue tends to be selling power, so tapping into the energy markets, and that can be wholesale markets, futures, PPAs, or some sort of government-backed subsidy schemes like auctions, feed-in tariffs, or CFDs. But we are increasingly seeing how renewable energy plants, not just batteries, are tapping also into ancillary services in the power market, like in the case of Spain, primary, secondary, replacement reserve, and technical restrictions. On top of that, we'll talk about the capacity market, additional revenues by selling the guarantees of origin and potentially other environmental attributes. I think the point is that revenue management is about taking very many strategic decisions and operational decisions trying to maximize the revenue of the plant. So it's not only about reducing the LCOE, reducing the cost, but it's about maximizing the revenue. And we believe we are starting to see a shift in focus towards trying to getting better at this revenue management and trying to have what we call the brain to take all of those decisions in order to maximize the revenue. When it comes to batteries, the important aspect is to notice that batteries can actually participate in a very wide range of these different revenue sources. So batteries do play a very important role in revenue management. And that's one of the reasons, not the only one, of course, but that's one of the reasons why they are becoming more important and more popular. when it comes to revenues, I'm sorry, I lost my slide. I don't know what I did. Give me a second. Oh, there we go. When it comes to revenues for batteries, as we saw in the previous slide, there is many different sources of revenues that batteries can tap into. But oftentimes, especially for some more conservative investors and banks, importantly banks, they mostly care about contracted revenues. So those revenues that are stable, predictable, and known long-term. So again, BESS revenues can be uncontracted versus contracted. So within the uncontracted revenues, at least in the Spanish market, there is at least 5 different sources of revenues, which are the wholesale trading. So that's participating in the day ahead, intraday, or continuous market. So that's essentially arbitrage. Very simply put, you buy cheap power at certain hours and you sell more expensive power at more expensive hours, and then you make a margin. And then you have 4 different ancillary services that batteries can participate in. Secondary band, which is in Europe is known AFRR, automatic frequency regulation reserve. Tertiary band, manual reserve, replacement reserve, and technical restriction. So all of those, again, are uncontracted, if you want to call them merchant revenues. When we go into contracted revenues, there is essentially 2, at least at the moment in Spain, or there will be 2. The capacity market, which we will discuss in a minute, which is upcoming, and potentially optimizer agreements, which we will also discuss in a minute. So with regards to the capacity market, many of you know that there is a draft regulation to create a capacity market in Spain. It has been under consultation, public consultation, to receive comments by the Ministry of Energy. That consultation ended up a few weeks ago, 2 weeks ago, I think, at the end of January. But in that draft, we already have a very good hint of what that capacity market will look like. So there is quite a few things that we already know. Those may change, but I don't think they will change very dramatically. So we already have a good idea on how the capacity market will be. So as said, draft regulation under public consultation until 2 weeks ago. Importantly, this capacity market will allow the participation of power generators of any technology, by the way, is totally technology agnostic. Storage, demand, and aggregation of different units. There will be actually 3 different auctions or contests for this capacity market. There will be the main one, which would call it T-5, because that means that from the time the auction takes place, the winners of the auction will have up to 5 years to start providing that capacity service. And that service will last up to 15 years, but we actually don't know for how long for each technology. There will be a second one, which is the adjustment auction. So as the time goes by, the ministry can identify capacity market needs, and they will be able to call for additional adjustment auctions along the way, and those will be only for 12 months. And then there is a transitory auction from basically now, or from when the first main auction is called, up to 5 years ahead. In order to cover those 5 years gap, the government is able to call for transitory auctions. It's a pay-as-bid auction, and this is important. So it's unlike, and this is a big difference with other capacity markets across the world, unlike other markets where it's pay-as-clear, in this case, it's pay-as-bid. So in Spain, just be careful what you bid for. because if you win, that's what you will get. And you will get a certain amount in euros per megawatt of capacity per year. And this amount, this payment is unindexed. So there will not be any inflation adjustments in principle. Nearly everyone can participate in this auction, any existing technologies. The only thing is that for existing, so you have to have some limits about gas emissions or CO2 emissions. Essentially, what it's saying here is that gas peakers, CCGTs, will be able to participate, but coal plants will not be able to participate. And then, of course, new installations will only be for renewables, batteries, or demand. So this capacity market does not contemplate the participation of new gas speakers, for example. In terms of the duration, that's a big question mark. Existing installations can be for 15 years, 12 months. New installations up to 15 years, and the up to is quite important because we don't yet know whether it's 1, 2, 5, 10, or 15 years, and demand up to 10 years. Importantly, this capacity market is not compatible with any other remuneration scheme, Recore, feed-in tariff, any other auction. So it's only the capacity market. So all in all, this is what we do know at the moment. But again, there is significant uncertainties as to the details of each of the auctions, and those details or those key parameters will really be the ones that will determine whether the auctions can be a useful tool to promote batteries or maybe not so much. An important comment perhaps to be made here is that the capacity market in Spain is not intended to foster batteries. The main objective of the capacity market is to ensure security of supply. As a consequence, it may be an enabler of batteries, but that's not the main goal. Anyway, so in terms of we don't know yet. First of all, the duration, especially for the main auction. So again, the regulation, the draft regulation just says up to half of the lifetime of the system, which everyone is sort of interpreting as up to 15 years. But again, we don't know whether it's going to be 1, 2, 5, 10, or 15 years. And that's going to be quite critical in order to ensure the financial viability and bankability of those battery projects. So if it's 5 years, it will be quite challenging. If it's 10 years, may work. If it's 15 years, that will be great, but we don't know yet. We don't know either how much will be auctioned out, how many megawatts or gigawatts of capacity the system needs and the government will auction. So yeah, that's another big uncertainty, because if the auctions are very small, maybe not many systems, including batteries, be able to benefit from those. The derating factors, it's another key uncertainty that we don't know at the moment. As you may be aware, and it's a very common theme in other capacity market across the world, different technologies have different derating factors that essentially will determine their ability to serve the capacity markets when they are needed. And that is a number, it's an index, it's a number from 0 to 1. So obviously 1 is the highest value where you're supposed to have the best ability to serve the capacity market. And 0 is just you cannot. So for batteries, this is particularly important. Typically, longer duration batteries have higher derating factors, and that will make them more eligible for this capacity market. But again, another big uncertainty. And then stress hours. This is a new concept introduced by the ministry. Still some question marks around this concept, something to be clarified. There has been some allegations in the consultation period for these stress hours, so something to be defined. Economic guarantees, this is an important one. As with any other auction, practically, before participating, you have to place some sort of economic guarantee. And also, while you are providing the service, you have to also maintain that economic guarantee. And that's a tool for the government to ensure that you will provide the service if you're awarded, and that you will provide the service while you are awarded. Again, this is important. This may be a barrier to entry for some players, so we definitely need some clarity on this front. And finally, the calendar. So we don't really know when these auctions will take place. Yesterday, I was at an event, and a representative from the Spanish ministry did sort of let us know very succinctly that they are intending to call for the first auction within 2025. That would be great news, but still to be seen. I'm going to accelerate perhaps a little bit in the interest of time. Optimizer agreements. Okay. An optimizer, I'm sure you all know, is essentially a player that will enable the battery to participate in the different markets that we discussed. And of course, will enable the battery system to generate revenues. We believe that an optimizer has to have essentially two things: road to market capabilities and optimization capabilities, what we call the brain. Let us explain what we mean by that. So road to market is essentially having the ability to trade power in the wholesale market in Mibel, and having a license by OMIE, the market operator, let's say Spanish market operator, but also to be able to participate in all the balancing services run by Red Eléctrica. Typically has what is called in Spanish a zona de regulación, which is a must to be able to participate in the secondary market, and also has a central control. So yeah, these are sort of technical capabilities that the optimizer has to have. But also it has to have the ability to take those decisions, what we call the brain. So it has to have the proficiency to be able to decide what markets to tap into at each moment. And that entails, by the way, having some sort of forecasting capabilities. These players tend to be very technologically savvy. They tend to use, artificial intelligence, machine learning, and all these techie things. And of course, it has to have the platform to communicate with the battery energy management system, the famous EMS. The brain, what we call the brain, is really at the core of optimizing the battery. It is really what's going to give you the competitive advantage to maximize the revenues. Because if you think about it, if you are operating a battery, you really have to decide all the time whether you are playing or you are participating in the wholesale market, in which one of the three, day ahead, intraday, or continuous, or you decide to participate in any of the ancillary services, or you decide to go to the capacity market. And you can do a combination of those. Most importantly, you have to decide this around 35,000 times a year, as we will move starting in, I think it's June, to a quarterly hour market. So there is 35, 40 quarter of an hour in a year, and that's the number of decisions, or that's the number of the decisions that you have to make to optimize and maximize the revenues. So we at JLL have spent some time over the last few months discussing with optimizers what products they have specifically for batteries in Spain. And we've been doing that because we know a lot of these players. Some of them are the incumbent utilities, some of them are comercializadoras, power retailers, some of them are European players coming to the Spanish market. So we've been having those conversations, and we've been mapping the products that they are defining, because importantly, and this is a very important comment for me to make, this optimizer market is a market still under formation, still very immature. So many of these players are thinking about what products to offer to batteries. Some of them already have products. Some of them don't even have products. So yeah, we will see the evolution of this market. But anyway, so I think we spoke to quite a few of those, about a dozen, and there is more. And we collected some of the data that we capture in this table in order to summarize the three main products that we are observing for batteries in Spain. And by the way, these products are to be taken with a lot of care. So that's why we have a sticker there saying indicative terms, because they are still under definition. It's a bit of a simplification. These contracts can get a lot more complex. But anyway, so from higher risk to lower risk, we have, first of all, the full profit share. That's the first kind of type of optimizer agreement. In a full profit share, essentially, the optimizer takes control of the battery and operates the battery in all available markets, and tries to maximize the revenue. And then the optimizer will keep somewhere between 4 to 10% of all net revenues, and the owner of the battery, the sponsor, will get the remaining revenues. Net revenues means excluding network charges. These contracts tend to last 1 to 3 years. But as it says in that slide, this product is not yet available in Spain. People are thinking about it. It's very common in places like Germany and the UK, but we don't yet have it in Spain. Now, the next one is basically having a floor plus sharing the upside. So essentially, yeah, the optimizer will participate in selected markets, trying to maximize the revenue. Importantly, one variation of this product is what we call or what some people or optimizers call a virtual battery, which is essentially a financial swap only in the day ahead or intraday market. So anyway, the revenue levels here will vary. For longer duration batteries, is higher prices, of course. So for 2 hours, the floor is around 40 to 60,000 euros per mega, plus, so the sponsor will get plus between 50 to 70% of the net revenues. For 4 hours, those levels trying to go a little higher, maybe floors in the range of 60 to 80,000 euros per megawatt of installed capacity, by the way. And then the optimizer will keep 10 to 30% of the revenues. These contracts are available already in Spain. To our knowledge, none of them has been signed yet, but there is ongoing discussions between some sponsors that have more advanced projects and really need these contracts relatively quickly. Yeah, and duration up to 10 years we have seen. Now, importantly, from a technical perspective, of course, these batteries need to be operated within some technical parameters that are subject to a lot of discussion in the contracts, but those are indicative value in terms of number of cycles, round trip efficiency, depth of discharge, availability of the battery, and degradation. So again, yeah, those technical parameters need to be followed and respected by the optimizer. And finally, we have the tolling agreement, which is similar to a fixed floor PPA, sorry, a fixed price PPA for renewable plants. Essentially, the optimizer will operate the battery as they want, and they'll give you a fixed price, and they get everything else on top of the fixed price. Those fixed prices, you can see the numbers there, about 70 to 80 for 2-hour batteries, 90 to 100 for 4-hour batteries. Yeah, and this duration 2 to 10 years. Again, this is a summary, just take it with caution, but I think this collects some of the market intelligence that we've been gathering in the last few months. Just to end up a little bit of a commercial here, and I'm finished. So again, we are financial advisors. We at JLL are financial advisors. We know the battery market very well. We can help developers disposing their projects or their portfolios, whether those are under development, ready to build, under construction, anything. We can help you find and close optimizer agreement. We can help you raise capital. We can help you with the financial modeling. And then, of course, for investors in batteries, we can support you in the acquisition of those projects, also for optimizers, financial modeling, and strategic consulting. So these are the kind of services we can support all of you guys in the battery space. And I'll skip the annex, and yeah, that's it. Thank you very much for your for listening, and I think we can have some time for questions, Alejandro.
Yes, of course. And thank you, Tomas. Really interesting information you shared with us, and thank you for sharing it again. And we hope you come again next year in February. So, because yes, this is one of the hot topics, as you know, in the energy sector. So yeah, we can start now the Q&A section of the webinar, and I see that Uriel has already selected some questions. So Uriel, if you can begin.
Yes. Okay. Well, first, thank you, Tomas, because it was a really interesting, lot of information, very useful also for what we are doing. That we are basically trying to forecast what are the revenues that you can get with your battery project. So basically, that's very useful information, very interesting. And again, as Alejandro mentioned, next year we expect an update on all those parameters. Okay. Yeah. Some questions. Why are gas storage level? Let's start again. Why are gas storage level lows? Well, they are not really low. So we started the winter at 100%. So basically, with everything full as they can be. They are not low. They are around 50%, and we are already entering the final weeks of the winter. So gas reserves are there to be used in case of need, and that's what we are doing. So basically, it's been, as I said, it's been a colder winter than last year. So that means more gas demand for heating. Also, industry is increasing their gas demand with respect to the previous years that we were coming from a crisis. So basically, we are using the gas as it is intended to be used. The problem is that we are facing a supply concerns in the future. So gas reserves are at the level that they should be right now. So around 50% entering the end of the winter, I would say it's quite reasonable. The problem is that they are below the levels that we had last year, and the concerns about the supply during the winter for the refilling session. So they are not low, but they are lower than last year, and we are concerned about the supply. So gas storage is working as expected. The problem is that the supply situation that we are having, since we are no longer having gas from Russia, it's the main concern, it's the problem. But gas reserves are working as expected. Another question, hybrid PV and battery. What is the capacity of the battery installed compared to the PV capacity? Well, that depends on several factors. It depends on basically your PV production. It depends on how the battery is connected to the PV plant and to the grid. What is the capacity to connecting to the grid? If the battery is going to be able, or you are desiring to be able to also charge the battery from the grid or only from the energy from the plant. So it depends. With all these factors, then we try to optimize what is the best capacity that is going to give you the more revenues at the long term. But usually the optimal capacity is around being able to store around 10-20% the capacity, the PV production for a whole day. That's more or less. But again, it will depend on a lot of factors that you have to take into account in order to optimize revenues at the long term. And For hybrid PV, is the battery behind the meter or has its own capacity opinion and metering system? Again, it will depend. You can connect it in several ways. You can connect it behind the meter. So basically, it can only charge with the energy of the power plant. You can connect it in a way that you can also charge from the grid, and then you can meter it in different ways. So again, it will depend on how your installation is configured. And
Thank
that's
you,
basically it.
Yeah, thank you. And Thomas, I see you have selected some also.
Yeah, I'm happy to try to answer some of the questions in the Q&A. Maybe I can start by the question on the financing. I'll blend the question from Juan and Maxim on financing. So, to our knowledge, there has not yet been any financing for standalone BESS projects in Spain. In fact, there are very, very few standalone BESS installations. Most of them, to our knowledge, are just R&D projects. Some of the big utilities have these projects, but they're probably not focused on being commercially viable. Banks are very interested. They will tell you they want to finance. They will tell you that they are interested in learning. They will have a conversation with you. But the reality is, and this is very well understood, that until you go with contracted revenues with a bankable, i.e. creditworthy counterparty, they will not provide non-recourse finance. Maybe they give you corporate finance, but not non-recourse financing. So until a project comes with a capacity market award or a optimizer agreement with a counterparty which is bankable with a floor or with a tolling, they will probably not finance. In those countries, like for example, the UK, I think in Europe is more mature. Yes, financing has happened. It will happen in Spain in terms of leverage ratios. I think will be maybe a little lower, 50 to 60%. DSCRs for contractor revenues will be similar to PPAs at the moment, say 1.2, 1.3. So that will give you some idea on debt sizing. So that's for financing. Then Lourdes had a question on the top manufacturing markets for storage. So Lourdes, sorry, I'm not really sure about where the batteries are manufactured. Of course, most of them in China, also in the US and Europe. But I will recommend you take a look at a recent report, which is extremely comprehensive, by the Volta Foundation. So if you just go to Google and type Volta Foundation, you will be able to download a super in-depth analysis of the global storage market, including manufacturing, for free, actually. So yeah, take a look at that. And then Tom is asking whether the combination of solar PV and battery projects, hybrid solar PV and battery projects, can participate in the capacity market, and the answer is, as far as I understand, and according to the draft regulation, yes. However, to be realistic, it will be the battery part of the hybrid that will actually participate because of the derating factors that we were mentioning before. So if you think about solar, if you have a solar plant, you could provide some ancillary services, but those are very limited and only going down. So for example, secondary reserve, you cannot provide services to go up, but you can to go down. So it's very limited. So the derating factor for a solar only plant will be very low, and that will really make it very difficult for the solar plant to win.
Okay, perfect. So that's most of the questions. And since we are already out of time, we will answer
the and perhaps questions. I can answer okay. One more question from Carlos.
Yeah.
Carlos is asking about whether storage manufacturers are providing optimization services or they leave these to third parties, traders or retailers. So the only case that I know of a manufacturer that provides something like an optimization service is Tesla. As you know, Tesla is a big battery manufacturer, and they have this software or product, they call it autopilot. We have seen that in Germany, in the UK, in France, in the Netherlands, and this autopilot product by Tesla, it's sort of the brain that governs those decisions to optimize the battery, but I don't think it provides road to market. So in my slides, it will be the brain, but not the road to market provider. But yeah, that's the only case I know.
Okay, perfect. So that ends the Q&A section. And as Oriol mentioned, I invite you to register to our next webinar in March, and we will share it again with EY. Really interesting regulatory issues will be discussed there. And yeah, that's it. Thank you again, Oriol and Tomás, for the presentations and for the answers. And see you in March. Have a nice day.
Thank you very much.
See you. Goodbye.
Bye-bye.